this was going to happen. And I'm very curious to see what the catalysts are that's causing the market to finally do what a lot of people thought that it might do. I wasn't the only person who felt that way. Most experts that I respect pretty much felt like the chances of the market going down were greater than the chances of the market going up. And that tends to be what happens when the market just does so well for any period of time. I mean, you've had this great stock market and all this money's been getting made for the last few months. So, after the sunshine, you're going to have some clouds, you're going to have some rain. So what I'm going to do is read some of this to you in terms of what CNBC is saying about today's most recent market decline, 300 points. That's pretty significant. And then I'm going to sort of talk you through what's happening here and how I plan to respond to some of this. All right, so it says here in CNBC that the Dow Jones Industrial Average pulled back Tuesday as investors struggle to regain some positive momentum ahead of the release of key U.S. inflation data. The 30 stock index traded 309 points lower, or 0.8%. The S&P 500 declined 0.7%. Nvidia dropped by 4%. Other mega cap tech names like Meta and Netflix were down 2.3%, 1.9%. Amazon actually ticked up a little bit. So Amazon is actually the only mega cap tech company that hasn't hit a record high this year. So Amazon is, let's see, it looks like they either hit, yeah, they're very close to hitting their record high. I was going to say they either hit it or they're close to it, and that's going to be kind of a big deal. And so it says here that the March Consumer Price Index report is slated for release Wednesday at 8:30. So 8:30 a.m. Eastern, it looks to me like they're going to get more data on inflation. Let's see, they expect inflation to have increased 0.3% in March on a month-over-month basis. Investors will keep a close eye on the data as they search for clues on when the Federal Reserve will start cutting rates. Right now, it's a coin toss whether they'll decrease rates in June, according to CME Group's Fed Watch tool. Quote, the market has been treading water over the last week or so, worried about the Fed and its commitment to lowering interest rates, said Sam Stovall, chief investment strategist at CFRA Research. A stronger than expected CPI reading at both the headline and the core level could end up triggering a catalyst for correction. Whew, a catalyst for correction. A catalyst for correction. Now, here's what I want you to do. I want y'all to tell me, what do you think a catalyst for correction means? What do you think that sounds like? What's a catalyst for correction? Let's do a quick. I'm gonna see if how much of all this conversation sticking. What do y'all think a catalyst for correction um means? Okay, Errol says a market moving event. Okay, good answer. Natasha, market crash. Yeah, bear market. Joni, yeah, a sign the direction will change, or the market will change. Yeah. Elaine says correction. Okay. Lenny, timber. There we go. I like Lenny. Lenny, you win. You got the best answer. Yeah, timber. Basically, what they're saying is they're saying, oh my God, this market could end up screwing us, and because we're really kind of on pins and needles, worried about what these inflation numbers are going to look like. Because one of the biggest conversations happening right now is whether or not the Fed should lower interest rates, and there's a big argument against that. And if you notice in this article that I just read to you, basically what they're saying is that that's the question of the day, right? That basically the people are wondering, okay, is the Fed going to lower interest rates? If so, when? And if there's any indicator that they may not do that, well, that's going to lead to a big adjustment in the market. And what's happening is that the inflation data is being released this week. And if that data is bad, like if that data shows on any level that inflation is out of control or starting to grow, oh, that's going to significantly reduce the probability that the Fed will reduce interest rates, which will then lead to a significant market decline because the market has already anticipated that the Fed is going to give them Christmas. So what you can do is leave your questions in the Q&A section. I'll answer all your questions. And also, I'm going to give a profit alert in terms of some stocks that I like, particularly if you see the correction. If you see the correction, that could be good for you, right? Remember, every yin has a yang, every yang has a yin. So that means that literally a lot of the things that you might look at and say, oh gosh, this is so bad because I'm already invested in the stock and I just saw the price go down. So I had a paper loss. Yeah. But a paper loss is also an opportunity going forward for you to buy more shares of that stock or to find another stock that you've had your eye on because now that stock is available at a better price. So what I'm going to do is while you guys put your questions in the Q&A section, I'm going to grab a couple of the stocks that I like right now. I'm literally going to go shopping, like literally right during class, after class. I'm actually going to shop for some stocks that I actually want to purchase. I get excited on days like this when the market kind of gets a little bit shaky and weird. That's my opportunity to hop in and take a look and see what's out there. So what I'm going to do is I'm going to look at, I gave you guys that list of dividend monsters. Remember, I told you all the stocks that pay good dividends. So what I'm going to do is actually pull that list up and give you a couple companies that I like here. So give me one second. Let me see here. Here we go. Here's the button. All right, button, boys, hit the right button. Okay, so what I'm going to do first and foremost is give you a direct link to the dividend paying stocks. Dividend stocks tend to work really well when there is a dip. So when the dip happens and the market is declined, but then also there's a lot of uncertainty about whether or not the market's going to recover. Dividend paying stocks are solid because they give you a solid ROI, even if your stocks don't necessarily do what you want them to do, right? So the list of dividend monsters, I just put that in the chat so you guys can grab it, take a look. It's up to you to decide what you want to take a look at. This is not investing advice. This is just me sharing with you assets that I like. So one of the companies, if I was to pick the one that I like the most, I would start with, Kenan Holdings, Ken, Ken. It looks like that stock has a really great dividend. Altria Group, ticker symbol MO. They have a really great dividend as well. So if dividends are your thing and you're into that kind of thing, then this list of the dividend monsters, I think, can benefit you. So feel free to take a look at that. Now, if I go into E-Trade, I'm going to look here right now and kind of like think out loud about my thought process in terms of how I'm going to respond to what's happening in the market. Now, first thing I got to look at is I don't even know. I tend to keep my money active. I tend to stay highly illiquid for the most part because I like to keep my money like working for me. And so as I'm looking at my portfolio now, I expect to see a dip, and there is a dip. I'm looking here, and I did, on paper, so there were some losses here. I don't have as much free cash flow as I'd like to have. But let's see, what's a stock that I would jump in here and buy right now? Let's see. You know what? I think I want to grab Meta. I think Meta is a good stock to take a look at because Meta is really, really good at making money. They're better at making money than I thought. I really didn't have a lot of confidence in Mark Zuckerberg for a while, especially in 2022, when a lot of pressure was put on him and he changed the name of the whole company and put all his energy into VR. Now I'm starting to kind of understand his vision a little bit more. I think that he did a great job of adjusting to a new market environment. And so one way I'm going to reward him right now is I'm actually, as we're talking, I'm going to buy a share of Meta. Now I'm doing this with you all right here and right in front of you to really sort of show you what the thought process can be when it comes to stock ownership. You don't have to make it a big deal. Just think of it as, what stocks are is really a store of value. It's really just a place where you're just holding your money. You're just putting your money somewhere so you can go back and grab it later on. It's not really spending money. It feels like spending money because one minute you have money in your pocket and the next minute the money's gone, but you're not spending money. You're storing the money. So even if you buy a stock for $100 and the value of the stock drops to 80, 5 years later, well, at least 5 years later, you've got $80 left of the 100 instead of spending the money, which means you would have $0 left of the 100. So remember, income doesn't mean anything without wealth. Income is just an opportunity to have wealth. Income is the engagement. Wealth is when you get married to your destiny, right? So when you have a high income, you have an opportunity to build wealth. You have an opportunity to be rich, but you're not really rich because your whole economic destiny is contingent on whether or not your boss decides that they want to keep you around or that they're tired of their DEI program and they want to get rid of you. So always sort of have that habit of taking a little bit of that income, a little bit of that surplus, and putting that consistently in stock investing. I would literally, like you literally, it's really okay to do this, to be honest. I know it sounds crazy. Some people are going to argue with me all day, but I don't argue with people like that because I know what I'm talking about. Is literally, you could literally just, if you're out shopping and you see Nike and you're like, oh, I'd like Nike sneakers. I think I'd like to be an owner in Nike. It's okay to get on your app and just buy a couple shares of Nike stock. It's really okay. You don't have to go through and sit down and think about it for 6 months and go through 1,000 reports and everything else. What's fascinating about the stock market that makes it beautiful is that all that work has kind of been done for you already. It's already kind of been done for you already. I mean, sure, there are big picture things you can learn about the risk profile of your portfolio and whether or not you want to, to expose yourself to certain things financially. But for the most part, a lot of times, honestly, people overthink it. I go back to that monkey experiment. I told you in 1971, Burton Malkiel taught monkeys how to invest in the stock market, and literally these monkeys were throwing darts at a wall. And when they threw the dart at the wall, that's the stock that they would pick. And the monkeys built more wealth than people who don't invest. So the person who in your family who's sitting around overthinking it, wondering what to do next, and spending 5 years sort of deciding to make that first little move, that person will have less wealth than a monkey. Now, give me a yes in the chat if you can agree with me that you are smarter than a damn monkey. How many people in here will tell me that you're smarter than a monkey? If the answer is yes, then I need you to go ahead and make that move and stop being scared. I'm right here with you, and I can tell you that it's really okay to just dive in and be consistent. That's better than not investing at all. The biggest mistake you can make when it comes to investing is not investing at all. Now, what you want to be careful about, though, is getting involved in stupid stuff that sort of follows these goofy little trends, like meme stocks. Not the best idea because meme stocks were like gambling. A lot of these stocks were overvalued significantly. They didn't have the true worth that they appeared to have on the market. So that was a bad move. Another example is the crazy crappy crypto. All this crypto that was out here that was pretty much worthless, and people were thinking, oh, if I buy this coin for a nickel and put $5,000 in it, and the nickel goes up to $1, then I'm going to have 5,000 times 20, which will be $100,000. That almost never happens, right? Sometimes it can happen for sure, and you'll hear stories about that. But what happens is those stories are very biased in the sense that people don't tell you about the money they lost; they only tell you about the money that they made. And so stuff like that doesn't do well. Another area that you want to be careful about are these penny stocks, like stocks that cost like 80 cents or $1 or whatever. A lot of these companies are what they call pink sheet companies or over the counter stocks. Over the counter stocks are not healthy investments. Those companies, they tend to just end up wasting your money for various technical reasons. Actually, it's mainly because the market for these stocks is such a bad market. There's a lot of frictions and a lot of bad actors and liquidity issues, right? So typically, though, if you are a person, let me just break it down like this, make it real simple. If you're a person who consistently buys S&P 500 companies on a regular basis, you're gonna be fine. If you are a single mom who makes minimum wage, who finds some way to put $40 a week, if you could, into the stock market consistently, then within a decade you will have more money than half of all Americans in your bank account. If you continue to do that for 30 years, you will have more money than 90% of all Americans. That's true for anybody. So the process is democratized, it's wide open. The biggest challenge that I can find that I see as a financial scientist is that people don't believe it really works. Like they don't believe me when I tell them actually it's quite straightforward and they just don't do it. And then you've got to fight through all these habits, all these fears, all these concerns, all these anxieties. And again, that's why we created the first ever Black financial therapy department in the Black Business School. I called in my wife, who's a great therapist. She actually trains therapists on how to be therapists. That's how good she is. And I said, bring in your therapist friends because we have a barrier, a psychological barrier to wealth where our brain is so filled with worthless beliefs that don't actually work that we don't have room for the beliefs that actually do work. Or by the time I show up with a solution, the credibility of the solution is hindered because you've been fed so many lies, so much BS, so much nonsense. And so it's almost like going to a restaurant where they fill you up with so much bread and garbage that by the time the meal arrives, you're not even hungry anymore. And so what I really want to do is get you to sort of decompress, let go of a lot of that nonsense, and just do what you got to do. It's not supposed to be rocket science. It doesn't have to be rocket science. So literally, if you're just a person that has the habit of buying a couple shares of stock every time you go out to the mall, every time you go to dinner, or you go to Applebee's and you say, well, who owns Applebee's? What company owns Apple? So you Google it real quick and you say, oh, I want to own shares in the company that owns Applebee's. That's a perfectly appropriate way to invest. That's better than the way most people invest, which is not at all. All right. So give me a yes if I convinced you a little bit that it's not a scary thing. I want to feel like I did something good today. So if you give me a quick yes, that'll help my self-esteem. So because sometimes, I get out here and I just run into all this craziness on the internet and it just makes you wonder if it's even worth it. So thank you all. You all keep me going. All right. So let me start to answer some of your questions here. And one thing that I'm actually putting together that I talked to you guys about in prime class last night is something, we do money in the morning. I created money in the morning mainly because I said, if we are talking about money every single day, almost like Kobe Bryant in the gym shooting jumpers every morning to become a great basketball player. If we do that every day, then we'll get in the habit of talking about our money, thinking about money, being financially conscious, whatever. Well, you guys really love it, right? So you guys, hundreds of you are showing up every single morning, and we do it every morning at 10 a.m. Eastern. And it's going great. And by the way, if you're not getting invites to Money in the Morning, just text the word morning to 87948. If you text morning to 87948, I'll send you an invitation. But then I said, okay, so what would be the natural extension to that? Well, now that we've got you in the habit of being financially conscious every day, you kind of know what the big picture is. You kind of know what you need to do and why you need to do it. The next goal is to say, okay, well, how do we have some systematic process where you can learn specific skills on a daily basis, right? So the bright idea that I came up with, and I ran it by you guys the other day. A lot of you seem to like it. I'm gonna run it by you again for those that didn't hear it. Is something I call money in a minute. And what I said was, I said, okay, it's not enough to just sort of have a class where we sign up for a class and then we never get time to do the class. I don't know if anybody's ever done that, right? Where you sign up for something because you really know you need to do it, but then you never get around to it. Like you never get around to like logging in and going and looking at the content and all this other stuff because you got other things to do. Life kind of gets in the way. So I said, how do we I don't know if anybody else goes through that, right? But that's a problem I have. I've signed up for thousands of classes damn near that I never ever actually got around to. So I said, what if we had something that where we could inject key elements of important financial tools in the flow of life, where it literally is something that takes less time than it takes to go to the bathroom. So that was where the money in a minute concept came from. So here's how I wanted to do it. So let's say you want to learn real estate and you know nothing about real estate, but you want to get good at real estate. You want to at least learn the basics, which will kind of get you going so you can dig deeper and learn more. So you're a complete beginner. And what if you had something where through the Black Business School, you were signed up for a real estate 101 sort of sequence where every single day you would get a text message with that lesson for that day. And that lesson would take less than 2 minutes. And you could go in and you could do more of them if you wanted to, or you could just say, okay, I did my lesson for today and I'm done. And then we would give you little self-study exams so you can make sure you know the concepts. And then when you get done going through, say, 20 lessons, there could be like a certificate you could print out if you want to kind of almost like have a certification or something to hold on to say, I completed real estate 101. Or let's say you did that with crypto or stock options or Forex or all kinds of stuff, right? Would that be something that would work for you? Would that be something that you're interested in? I hope the answer is yes, because that's something that I'm actually actively working on and developing right now. And so this money in a minute concept, the goal of this is to do something that I found that I'm actually decently good at, which is giving you little things you can do that will dramatically impact your understanding of finance and economics. I notice that a lot of you are intimidated by the stuff, and it's not enough for me to just sit here and wave my arms and say, no, 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 don't be scared. There's nothing to be scared of, right? I can do that, but that doesn't necessarily work. It's better if we say, okay, let's feed it like baby food. Okay, so let's start from the beginning. Let's go through all the terminology that relates to stock options, and then you can be introduced to it in a steady flow, but then also you can do it in the flow of your day where you don't actually have to stop, sit down, get a cup of coffee and literally sit in, through an entire class. I mean, that option's still available. As you know, we have literally thousands and thousands of long form lectures that I've personally done over the last decade on everything, especially stock market stuff. I mean, if you go on the Black Stock Market program, you'll see every single thing we saved all that. So there's a ton of stuff there. So if that's what you want to do, if that's your style, you still have that. But money in a minute is sort of like me poking you, in your phone and saying, "Hey, I'm here. Here's your lesson for today, right?" Okay, so that's the money in a minute concept, right? So then you have money in the morning, which you can still do. You can come in. It's our kind of gathering to kind of elevate our economic consciousness. Like this morning, we talked about Terrence Howard and his lawsuit against Creative Arts Agency and what that means from an economic consciousness standpoint. And then we have Powernomics training every Wednesday, which is Dr. Claude Anderson concepts, so we can understand how Black economics works and why it's important to understand that and what the history of that is. And then also, of course, we have special events in the Black Business School. We have the B1 Forex Academy with Michael Edwards. Ace Chapman right now is showing the students how to acquire businesses, how to go out and buy assets. Dr. Lene Javette just joined our faculty. She's working heavily in the area of entrepreneurship. She's our dean of entrepreneurship. And also Andre C. Hatchett. We just signed him. He's known for actually helping people make extra money by becoming mobile notaries. And that was a specific skill I sought out because I noticed a lot of you are looking for ways to make extra money as side hustles. So Andre, I'll bring him in at some point. So that's the goal, that's the belief. And I'm thinking that this would allow you to have a framework so that let's say you or your child, it says, I really, really want to be really, really good at Black economics in all these different areas. Well, it allows you that ability to kind of do it on a daily basis, right? Where, you don't have to go to the University of Iowa. You can go to the Black Business School and know that for really a fraction of the cost, like literally one thousandth of the cost. Because I think, in fact, college tuition for some universities is actually going to cross $100,000 per year this year. But literally for like literally a fraction of a fraction, you're learning like so much more and you're learning things that are directly impactful on your day-to-day life. We literally sit around all day and think about ways to give you the key elements of financial security, which is income and also assets. If you have income and assets, you're financially secure. And you're not just financially secure, you're free. You're not just free, you're happy because freer people tend to be happier, and happier people tend to be the ones who are financially secure enough that they don't have to go to work or do whatever. Okay, because a lot of you are quitting your jobs, and I think that's awesome. All right, so anyway, that's my 2 cents for today. I'll keep you guys posted on money in a minute. When it launches, you guys will get an opportunity to join at a substantial discount. And then because I want your data, I want your feedback to let us know how we're doing. Because we're also obsessed with understanding how to serve your needs. Okay, so let me jump in and answer your questions now. Tammy says, "What's going on with SPY this morning?" Yeah, so right now, in that article that I read earlier about the decline in the market, basically the market, here's a good quote from a guy from CFRA Research, Sam Stovall. He says, "The market has been treading water over the last week or so, worried about the Fed and its commitment to lowering interest rates. A stronger than expected CPI reading at both the headline and the core level could end up triggering a catalyst for correction." So what's going on in the stock market is, you ever see like a Black mother when her son is out like running the streets all night and she's like at home worried about him coming home okay, and she doesn't go to bed until he walks through the door. This is kind of what the stock market is doing right now. The stock market, and yeah, Antoinette, everything's going to be under the Black Business School. So the stock market is kind of doing that right now. The stock market is, he used a lot of key words I want you to pay attention to. Remember, the stock investing is very emotional. The market is very emotional. The stock market is a drama queen. And it says here, the market has been treading water over the last week or so, worried about the Fed. So they're worried. They're in every economic valuation model in existence, worry and fear always shows up. When there's greater worry and there's greater fear, not only does it show up, but it tends to show up in a decline in the price of assets. You don't pay as much for something that you're worried about as you pay for something that you're not worried about. If you're in a relationship and you're worried about whether that person's going to leave you, you're not going to invest as much in the relationship as one in which you feel emotionally secure. All right. So with the stock market, if we were doing math, I could show you mathematically where this pops up. When worry pops up, it drops prices. The black economy, the reason black wealth has a hard time growing is because you're a traumatized people, and traumatized people tend to have lots of worry, fear, triggers, and insecurities. And when you're walking into an environment where you're scared to death, you're not going to invest as freely as you would in an environment where you feel safe. Just like love and economics are connected. Like they made a movie Love and Basketball, they could literally make a movie called Love and Economics because the emotions and the feelings are exactly the same. You don't invest where you're scared. So effectively, the market is a little bit scared. And that fear is showing up in a decline in market prices because, well, what is their fear? Their fear is, well, what's the Fed going to do? The Fed, we're in this relationship with the Fed right now. The Fed, the Federal Reserve, has become the de facto world banker. They pretty much decide if what the economy is going to do next. They kind of play God with the economy. And how do they play God? Well, they play God by manipulating interest rates and manipulating the money supply, tightening the money supply, loosening up the money supply, right? They go back and forth. And so basically the Fed has been sending a signal that now that they've spent years tightening the money supply by increasing interest rates, they're like, okay, now we're going to begin to ease. We're going to relax. We're going to start lowering the interest rates again because the panic is over. We don't the inflation fear has been harnessed, has been dealt with, so now we can move forward. So it's like you, so you've been in this horror movie, and the thing about horror movies, anybody ever notice how in horror movies they always mess with you? It's like really dark all the way through the movie, and then at the end, after you think that they've killed the bad guy, everything suddenly lightens up, like the weather gets nicer and the sun comes out. If you ever, I notice these things about horror movies, right? But that's when they always get you, right? They always make you think everything's okay. They make you think that the girl survived and that the nightmare and the horror is over, but it's really not. Well, the same thing is true here. Now that the horror movie of inflation has kind of come to an end, now the sun is out and they're like, oh yeah, we're gonna start lowering interest rates now because there's nothing to panic about. Well, maybe there is, because two things are happening right now that are really worrying the economists. The two things that are occurring are number one, every time they look at the economic data, the jobs report, GDP, all that, they find that the economy is super, super strong, right? And the only time you lower interest rates is typically when the economy isn't strong. They thought that the economy was going to start weakening and that they would lower interest rates to make it better. Lowering interest rates is like giving it medicine. They were like, "Oh yeah, it's going to get sick because we've had rates so high, so that's going to slow down the economy. So when it gets sick, we're going to start lowering the rates to kind of let the economy take off." Right? Do you follow this? Let me know if you're following this. Give me a yes if you're following this. Okay. Um, so because the economy has been strong without the medicine, people were like, why would you give it medicine if it's not sick? The jobs report was through the freaking roof. It was absolutely insane. A lot of it, I talked to you guys about this yesterday. A lot of it's linked to millions of immigrants coming into the country. Again, this is my theory. The reason I think that they have open borders is because open borders really benefits the capitalists in this country. It benefits them because they have an endless supply of labor now. They're like, oh, we can go, people don't want to do this job for $15 an hour. Oh, we got 1,000 Mexicans now that'll do it for $15 an hour. They'll do it for 12, right? And that ends up increasing their productivity, increasing corporate profits. So stock prices go up because of that, right? This is why I want you to be involved with the stock market because that's where the money's at. The people that get hurt from this strategy are the workers. The laborers in this country don't get the respect they deserve. And that's something I've repeated. And I hope that you're hearing me on this. This is why I don't want you to commit to remaining in that labor class, not because I'm being uppity, but because that's just not the place to be in America. If you want to get screwed and you want to have the alleged moral high ground of complaining about how they're screwing you, then fine, do that. But if you want to get away from that, you got to become an investor on some level. Even if you're still a worker, invest, invest, invest so that you can get a piece of this wealth that's being created right in front of you. The second thing that's happening right now is this: in addition to seeing that the economy is just roaring and strong and all these other things, and it doesn't need the medicine, now they're like, well, what about the monster of inflation? In the last 2 years, we've been in the middle of this monster movie where we've been scared that this beast called inflation is going to come get us, the boogeyman. And we've been fighting the boogeyman. And you told us the boogeyman was dead. What if the boogeyman's not dead? So they're like, oh, okay, so now we know we don't need the medicine, which means the Fed is less likely to reduce interest rates. What if the boogeyman's not dead? Because if the boogeyman's not dead, then that means that this summer, when it's time for them to lower interest rates, they're going to say, no, we can't lower interest rates because lowering interest rates increases inflation. We can't add fuel to the boogeyman when we know the boogeyman came back. So if this inflation report, long story short, let me summarize this. If this inflation report comes out bad, it's going to probably be what appears to be a bloodbath. You're going to see big headlines. Market drops 600 points. You're going to see white men with gray hair on Wall Street sitting here like this. You're going to see everything that happens when you have a big market crash. And what I want you to do is not panic. What you do is you go in and you start shopping. If you have extra money to buy stock, you go in, you just say, okay, you find you some quality companies that know how to make money, and you just go keep grabbing up some more shares of those companies because this too shall pass. But this is what they're dealing with. And also, remember, we did that training the other day called Stormproof Investing, and I did that specifically because I had a feeling this was going to happen. And so if you haven't taken a look at that, I can share the link with you guys if you still want to look at that. I assume most of you have access. If you don't, here's the link. And it literally goes through specific strategies you can apply that will prepare you for a declining stock market. Because remember, a declining stock market is a wonderful opportunity. It's just like if you go to the grocery store and prices are declining, that doesn't mean you panic. It means you buy more stuff. You know, we don't go to the grocery store when the prices go up, but the stock market is kind of like that. The stock market is where people do the exact opposite of what they should do. When prices go up, everybody goes shopping, and when prices go down, everyone runs away. You don't run away from the grocery store when everything's cheap. You run in. And imagine if prices were dropped by 30% in the grocery store and everybody else is running out and you're running in, well, you're going to have the pick of the litter. You can go buy a lot of stuff at a good price and put yourself in a good position to prepare for the next stage. Okay. Where does the extra money come from? As AC, that's a great question. The extra money is really more so paper profits that come from valuations on the assets. So when they say that the stock market went down, what's really happened with the stock market is the stock market can't live in too much of a world of make believe, in the sense that a financial asset's value has to come from the real world. The only way a financial asset can have a certain value is if someone's willing to pay that price. If someone's not willing to pay that price, that is not the value of the asset. It's and I've mentioned this when we talk about like negotiating with your boss for a raise. Like if you go to your boss and you say, "Well, you're only paying me 50,000, and a person with my credentials is worth 70,000," that honestly doesn't mean anything until you show them that it means something. You have to literally come in and say, "This company's offering me 70,000. Now, what are you going to do?" That creates a more credible assessment of your value than you simply grabbing a number out of the air and saying, "This is what I'm worth." So when someone tells you, like if I look on my app right now and let's look up Apple stock. So I look up Apple. What's Apple worth right now? Now, let's process this. Let's kind of consciously reflect on this. Apple stock is worth $168.84. Now, here's the thing about Apple stock. Apple stock has dropped $15 in the last 3 months. So that means that 3 months ago, Apple stock was not worth 168. It was worth $183 per share. So their market cap right now, which is about Apple's market cap is, drum roll please, $2.61 trillion. So let's say that last week, the market cap, or 3 months ago, the market cap of Apple wasn't 2.61 trillion. It was about 10% higher. So let's say it was 2.9 trillion, $3 trillion. Now, I want to ask you a question. Do you really think that Apple has changed that much? Did what happened? Where did $300 billion? Damn, that's it. That's a lot of money, right? Where did the $300 billion go? Do you think Apple is really worth $300 billion less than what it was 3 months ago? Did they sell all their buildings? Did they stop making iPhones? Did they get rid of their CEO? Like what did Apple do to suddenly go from being worth 3 trillion to 2.61 trillion? I Pretty much nothing. Nothing. What happened was that the market's willingness to pay for Apple stock just changed a little bit. People used to be willing to pay $183 a share. Now, the last executed trade on this stock was for $168.84. That's the most that the market is willing to pay or is willing to bear for Apple stock, right? And nothing really changed. It's like you like if you I don't know, like sometimes if you're the same person, like I don't know, I'm thinking about. I remember when I got my first job and I made six figures, and I didn't understand why I suddenly became very handsome. I did because I was the same person. I really didn't get it. I was like, wait, I'm the same guy I was in grad school. But I was like, oh, that's right, I was broke in grad school. But when I was making six figures, and suddenly I became handsome, and suddenly my jokes became funny, and I became this supposedly amazing catch. But I was like, but I was a pretty good catch when I was broke. I just didn't, but maybe I wasn't, right? Because the market's assessment of me changed, right? So the market's assessment of Apple has evolved, and the stock prices, they don't pull them out of thin air. There are specific financial valuation models that are used. It's called the present value of future cash flows. That gives you what they call the fundamental value of the stock. But also, the thing is that the value that actually trumps that is the market value. And in many cases, the fundamental value and the market values don't align. So one example would be like the meme stocks or like Donald Trump's company. Donald Trump stock is pretty much a meme stock. Right now, that stock is trading for $36.19 per share. There are people that really believe that from a fundamental standpoint, based on its revenue and cash flows, this stock is worth about $1 or $2 per share. In fact, I really I kind of laughed because I saw their revenue numbers on the Trump media stock. Let me see if I can find it. It was really hilarious. Um, Let me see here. What was their let me see if they have their revenue numbers on the stock. I can't find the revenue numbers, but I remember specifically they mentioned how much money they made in last quarter or something. And literally, I think the Black Business School made more money than Trump's company did. Right. And this company was trading at a total market valuation of about $5 billion. Maybe it's 3 or 4 billion, but it was a very big number. And let me see here. Now the current market cap, yeah, it's $5.2 billion. So Trump owns 60% of that. So theoretically he has $3 billion in wealth from that particular company. But also sometimes the stock market does have the ability to be a little bit delusional in that investors can sometimes push the price up to a certain level, and what they're willing to pay is what they're willing to pay. It's no different from like if you look at I don't know, like luxury goods. Like how much is a Coach purse really worth? I don't know what a Coach purse is really worth, but I doubt that it's really worth $800 or $1,000 or whatever people pay. So investing in pricing is a mix between mathematics and psychology. And ultimately, the winner is reality. Reality trumps fantasy, reality trumps mathematics, reality trumps any sort of assessment you might do. All right. So let me see here. I bought low and dumped high, made some money. Good for you, Sarah. Good for you. Yeah, I sold some call options on the Trump stock. I made some money off that. All right, so let me go in and take a look at your questions as well. All right, so let's see. If I'm selling puts for the month, how do I protect myself from the downside if the price is below my strike price? Well, if you sell your puts in order to get cash for your portfolio, let's say it sounds like you're doing an option strategy. If you sell your puts, then what you might do is just roll them down, and that way you can get some money out of the puts and not get rid of the puts entirely. So if the stock price has really dropped a lot, then you can actually adjust your puts, right? So you can say, okay, instead of getting a put with a strike of 19, I'm going to sell that and buy another put with a strike of 15, and I'm going to take that cash difference, and that's going to be cash in my portfolio because I'm going to basically hit the reset button. So a lot of you that are in Prime are going to have to hit that reset button. If you have a question and you're specifically doing options with us, log in drboyceprime.com. If you log in to drboyceprime.com, there's a link where you guys can leave me questions. I'm going to go in later on this afternoon and answer a bunch of your questions because I know last night I couldn't answer every single question, but I answered a lot of them. All right, so let's see. AC Salam says, did you say that when the market goes down, dividend payments don't drop? A lot of times they don't because a lot of companies defend their dividend. And they do that because when they reduce their dividend, it's like admitting weakness to the market. And when you admit weakness to the market, there's hell to pay. And so a lot of companies don't want to go through that. So what happens is that even in the middle of the economic storm, companies will violently defend their dividend to make sure that the market doesn't get the wrong assessment of their stock and of their company. Let's see. Greetings, Dr. B. Glad to hear you're sounding better. Yeah, I had that horrible cold all week. I'm sorry about all that coughing and snorting that I was doing. My apologies. This text is about me contacting support on numerous occasions last. Okay. All right. So you know what? That's a great question. Yeah. If the support team put your email address in the chat. I don't know if anybody from the support team is here. Amani, if you're here, say something in the chat so I can. There we go. Amani's right there in the chat. So if you have a question about our support, we have an excellent customer support team that is absolutely obsessed with getting you whatever you need. So Amani is right there. And also the email address is support@theblackbusinessschool.com. If nobody replied, it's not because they didn't reply, because I know they replied. We look at the analytics. How long did it take you to get back to people? How many customer tickets did you resolve? They're on top of it, right? So if you don't get a reply, it's not because we run a bootleg operation. We don't do that. We don't do that over here, and because we respect you. So make sure you write the email address down correctly. It's support@theblackbusinessschool.com. They will take care of you. And in fact, we are so heavy on the support part that when I do class, a lot of times you'll see somebody from customer service that is right there in the chat to talk to you directly. So put your email address, talk to Amani in the chat. She will make sure that you're good. Okay. And Shaquana says, excellent customer service. I'm glad you feel that way. That's our number one priority. All right. So let's see. Albert Robinson, what's a good stock to sell options on? Marathon Digital. I like Marathon. Emily Mack, would you sell some Nvidia stock right now? Not right now, because it sounds like it went down. I'd probably buy some if I was a believer in Nvidia. Shaquana, what are your thoughts concerning Robinhood Gold? What are the advantages and disadvantages? I like Robinhood Gold because it gives you margin and there's some other little benefits. I forgot what all the benefits are. And also they got this new credit card coming out, and I went through all the reviews, and it's a really good deal. It's only available to people that have Robinhood Gold. And so you can make that decision. Of course, with credit cards, you got to be careful because they're always going to get their money. They're always going to find a way to make sure that they get something out of the deal. But just because they get something out of the deal doesn't mean you can't get something out of the deal. So never think that because the other party made money that you somehow get screwed. It's not always a zero-sum game. I would say that I don't mind you making money as long as we all benefit, right? The only time I feel screwed is when I do a business deal where they had all the fun and I didn't, right? I got nothing out of it. It's kind of like bad sex. Like sex is not a bad thing. You just got to make sure everybody's enjoying themselves. And if you're not enjoying yourself, but they are, then maybe there's somebody else you should be sleeping with. All right, so let me see. Am I sharing my screen? No, I'm not sharing my screen. Not right now. Let's see, Veronica, Dr. Boyce, may I have the contact info for the income tax people you recommended, please? Oh, I don't have a recommendation on that. You can email support@theblackbusinessschool.com and see if there's anybody that they have in the database, but I don't have anybody in mind that I could recommend. So I apologize for that. Let's see. CC, if I have 3,000 in cash to play with, which is better, using the funds to buy options or investing in a REIT. If that's all your investing capital, then I would say a REIT or a mutual fund or something like that might be the best move. Remember, the option stuff that we do in the Prime program is more so if you have a little bit of investment capital, let's say at least 10,000 or more, that you can apply to that specific strategy. But to me, that should not, in my view, I don't see that as that's not my top financial priority. You got to have that money in the back. That is your long-term investment portfolio. That's the more stable money that just sort of sits there. The option strategies that we do in the Prime program are specifically designed for one major purpose, which is to give you income every week. And so, but to make income, you have to have a capital base. Because how do we make the income? We make the income basically by buying a bunch of chickens and selling the eggs. We buy the chickens, buy insurance on the chickens, and we sell the eggs every week to make our cash. Well, you have to have that initial money to buy the chickens. So how do you get that initial money? Well, there's a few ways. One, you could get together with family and friends and pool your money together. Two, you could start working on that side hustle to increase your income. If you increase your income, it gives you greater opportunities for investment. And then if you do have that opportunity to have income, I think it's really to me, the most important financial goal any person should have should be to build a capital base. The most important financial goal, in my view, is not finishing college. It shouldn't be getting a better job. It should be building a capital base. Literally, you build a capital base for your kids. They never have to work again. Last night in the prime class, I showed you all using real numbers in the real world right now how if you literally were able to, over a 20-year period, do the $5 a day plan and get your child up to say $250,000 in wealth where they could buy like say 10,000 shares of Marathon Digital stock. I specifically showed you all how that kid at 22 years old could make more money than a surgeon without going to medical school, without doing 4 years of college, another 4 years of medical school, another year of a residency, maybe 5 years of an internship, working 18-hour shifts for the next 20 years. Like that's torture. That's torture. But in the average surgeon makes what, three to $500,000 a year. The numbers we did last night, I literally said, here, your kid's making $500,000 a year now. And all you have to do is instead of putting all that time and energy toward medical school, you put your time and energy toward building a capital base. That it's the same thing. It's the same thing, right? And I get excited about it. I get excited when I talk about it because it's a eureka moment for me because I like it when the world is simple, right? When I don't have to solve a million little problems and still feel confused. I like it when you can reduce a complex set of problems into one little thing you got to do. What's the one thing you got to do? And so the one thing that you can do if you do it is build a capital base. If you build a capital base, then everything else it fixes itself. Honestly, if you know what to do with it at that point, it's easy to make money at that point. In fact, I remember when I was on the faculty of Syracuse, and I remember being stressed out because I was trying to figure out how to get into these academic journals that are very elitist and they have a lot of gatekeepers and stuff like that. And I wasn't in the club like that. You know, I was a black guy. There weren't that many black people in finance. When I got my PhD in finance, I was the only African American, male or female, on the planet to get a PhD in finance that year. There was no one else on earth, right? So I was really like Will Smith in that movie, I Am Legend. I felt like I was there all by myself. And I remember thinking, like, okay, what am I going to do with my life? I'm 35 years old, trying to figure out what my next move is going to be. I said, okay, I have option A, which is to kiss these people's butts, figure out somehow to get how to get these white people to like me. I didn't know because I was just being myself, but for whatever reason, it wasn't working out. Um, Figure out how to get into their little journals so I can get this thing called tenure, which is a lifetime job. That was option A. I said option B is, or I could just go out and figure out a way to make $1 million. And making $1 million is really hard, right? But I said, if I'm a smart person, maybe I can figure out how to do it because there are plenty of people who do it. White people do it all the time. There are thousands of people who've done this. What's the secret? What's the formula? So I chose option B. I said, either way, it's going to be hard. Either way, I'm going to sit around pulling my hair out and I ain't even got no hair, just thinking about what the next move is going to be. How am I going to figure this out? So I chose option B because here's what I realized. I said, there's so many, you'd be amazed how many super smart PhDs I know who are sitting up in academia, kissing butt, doing work that they hate, dealing with people that don't like them, stressed out constantly. And they do all this because they're trying to get that tenure thing, which is basically financial security. That's all it is. That's really all it is. If you take away the financial security, tenure doesn't mean a whole lot, right? It's literally a lifetime job, right? So it's like welfare for smart people. And I was like, well, if I'm going to get financial security, if I'm a millionaire, I'll be pretty financially secure that way too. So maybe I should take this big brain I'm supposed to have and all this education and apply it to solving that problem as opposed to solving problems for these other people where they're still going to control my fate, even if because remember, the people that give you something can always take it away, right? So literally, this is the same thing here, this exact same thing. Um, you got a kid, a grandchild, there's two. They're not going to be financially conscious for about 20 years. 20 years means you are rich. You are rich beyond your wildest dreams. You are so wealthy right now, you don't even see it. You got 20 years. The greatest financial asset in the history of the world is time. You got 20 years of time to build a capital base for that kid. I've specifically showed you if you go to Black Wealth, was it blackwealthmasterplan.com? Black Wealth Master Plan. Is it Black Wealth Master Plan? I think it's blackwealthmasterplan.com. The $5 a day plan. You do that, you do the $5 a day plan, you do it for 20 years, you have approximately somewhere close to $100,000 after the 20 years. So if you double it up and you do, let's say you do $20 a day, which is $600 a month, which is the amount that of the average used car note. So you love your kid as much as you love your car. You do that 4X's everything. So by the time that kid is 20, they've got $400,000 in assets. Now let me show you what they could do right now. If somebody had $400,000 in assets, they could go to Robinhood Robinhood. They can literally do this on their phone. They don't even have to, this is no job, no going to college for 50 years, none of this stuff, right? They could go to school, they could go literally get on their app and they could go buy, and we did this last night in class, and buy, let's say, 10,000 shares of Marathon Digital stock. 10,000 shares of Marathon Digital wouldn't cost them the whole 400,000. It would only cost them 180,000 bucks. So actually, let's buy 20,000 shares. So 20,000 shares would cost $361,000 per year. They could then sell options on that stock, and let's say they pick options that expire next week. And they could sell these options for approximately 50 cents a piece. So they got 20,000 shares, which means they could sell 20,000 options for 50 cents a piece for this week to get their money for this week. So that gives them $10,000 per week that they're making in income from using their capital base. All they'd have to do is do some basic steps to protect the investment, to protect the asset. You got to protect the goose that lays the golden eggs. That's what we talk about in class. We talk about how to protect the portfolio, how to adjust it, how to make sure you protect your capital base. But literally now your child is making the same amount of money. The average surgeon in America makes between $300,000 to $500,000 a year. Your child's making the same amount of money as the average surgeon in America, and they never had to even go to college. They didn't have to go to medical school. They don't have to do 18-hour shifts. Think about that. To become a surgeon, you got to do what, about 12 years in school, at least 12 years. And then you get to the point where you start finally getting a chance to finally start making money, but it's only at a tremendous cost of the rest of your life. You're working way too long, you're sleep deprived, you're not spending time with your family, you're making all this money, you can't even enjoy it, and then you're living on pins and needles because you got to go cut people's hearts and guts open every day. And if you make one mistake, somebody might sue you and try to take it all anyway. This is a much easier route, in my opinion. It just requires a little bit of sacrifice and a little bit of planning. So use that time. Don't waste that time, and then you can have all the wealth that you want. It's very straightforward. I hope that this comes out the way I intended. And for those of you that have heard this before, forgive me. I'm going to probably keep repeating myself on this because I have to do this to help you understand how simplistic this approach is. But you got to decide to make a move. You got to take action. If you don't take action, then nothing matters. All right. So let me keep going here. All right. So good morning, Doc. I didn't have enough money to fund my Roth IRA for 2023. I do have the money in my Robinhood and other shares that I own. Should I just transfer the stocks from Robinhood to my other Roth IRA account for the sake of saying I contributed to my Roth IRA? Well, I'm not going to give you investment advice. That's not what I do in class. But I will say that you're asking, should you transfer your stocks from Robinhood? I do have the money in Robinhood. Okay. I would say that I can't tell you what to do with that. I think that that's a matter of deciding, do you want your, because I think that Robinhood actually has Roth IRAs on Robinhood, right? So I think you can actually do that right there in Robinhood. I also know their customer service isn't, last time I checked, it wasn't as great as like E-Trade or TD Ameritrade, where they'll get somebody on the phone with you. So I would sort of decide, do I want to do my IRA on Robinhood or do I want to do it on another platform? That's kind of, to me, that's the decision that you might want to make. Where's the Prime program? Yeah, if you go to drboyceprime.com, you could take a look, drboyceprime.com, if you want to join us and do the option stuff. Let's see, Rosa. I'm sort of new to this and a bit not sure what diversifying my portfolio is exactly. I've been purchasing shares of stock and I'm focused on getting 100 shares. How do I know when my portfolio is diversified? That's a great question, Rosa. A good way to have instant diversification is literally if you buy a stock like SPY, ticker symbols SPY, Sierra Papa Yankee. If you buy that, you've got instant diversification. It's like taking a multivitamin. I've got vitamins here, and if I take one of these Centrums, I have to take the ones for people over 50 now, which hurts my ego because it tells me I'm not as young as I used to be. And this one vitamin can give me vitamin A, vitamin C, vitamin D, E, K, thiamine, riboflavin, niacin. I could keep going. Calcium, phosphorus, iodine, magnesium, zinc, all that, right? So a mutual fund is great, and the ETFs are great because they're like financial multivitamins. So literally, a person could just invest in, say, SPY most of the time and be pretty diversified. It's not perfectly diversified because you still want to maybe have money in in real estate if you can, or maybe have money in your business, right? So you want to kind of ask yourself like the what if question, like what is the main source of my income? What's the main source of my wealth? And if I lost that main source of my income or lost that main source of my wealth, would I still be okay? If the answer is no, then that probably means you need to be a little bit more diversified. If the answer is yes, then then the answer is yes, right? If you know if that makes sense. Okay, so that's something to think about. Now the stock options summit, yeah, that's going to be in Los Angeles, April 19th. If you want to come hang out with us, I think it's well worth the flight. We're going to have a good time in LA, bright, sunny Los Angeles, nice hotel. We're going to do this on April 19th, the next week, and we're going to spend 2 days studying options. I'll give you tons and tons of knowledge and material understanding. I'll stand on stage and wave my arms and hug you, shake your hand, kiss babies, all that stuff. And you'll also get a chance to network with other people that are in this class. So it's a great social experience as well if you want to be around people that can help you to elevate your economic game. Let's see. In the All Black National Convention's similar. That's going to be in Chicago, October 25th through the 27th. So you can go to allblacknationalconvention.com if you want to take a look. That's allblacknationalconvention.com. Let's see. Good morning, Dr. Watkins. I've not been able to find someone to join me on the payment for the stock options class. How much is it monthly for the Prime program? Should I just wait until I have 25,000 in cash to start trading options? Um, there are people in there that have less than that. The more money, the better, obviously. The monthly fee, I think, if you there's a training called How to Make Money Without Working that you can find on boycewatkins.com. If you go to boycewatkins.com and look for that training called How to Make Money Without Working, that'll introduce you to Prime. And at the end of that video, there's a chance to join. I think the monthly rate is about 155 per month or something like that. So feel free to do that, or you can do the annual option, which I don't know what that price is exactly, but you can feel free to take a look at that. Is there an options class at the national convention? No options class, but we do have an options meetup. Last year, all the Prime students got together, and I saw Errol. Errol was doing a great job standing at the front of the stage, doing his thing and teaching, and I'm so proud of him. I'm always proud of all of you when I see you evolve and grow, and some of you are so smart, and it's such an honor to get a chance to play a part in your learning process. Let's see, Roxanne, thank you for this training platform. What are the signs of your stock recommendations for first time, or sorry, what are some of your stock recommendations for first time investors who are single moms? I would start with a I would start with a mutual fund. If you're intimidated and you're not sure, just open your app, look up SPY or VOO, Victor Oscar Oscar. Also, if you text the word money to 87948, I can send you additional stuff on stocks and stuff like that. So text money to 87948. And not only will you get that training how to make money without working, but you can also get lots of stuff that we send you out from the Black Business School. That might be a good place to begin. But I think if you're really, really nervous, start with the mutual fund, and then high quality companies. You can't go wrong. Like, do y'all know what the research says, that literally a person could literally look, like, you could literally go look at a list of the top 20 companies in America, and once a week just pick one, and you would have more money than most people that never invest in the stock market. That's how straightforward it is. It's not something. A lot of people that teach this stuff, they I can tell when they're not qualified, because they in order to give you the impression that they know what they're talking about, they'll have you doing all this extra work. Like, oh, we're gonna go through with the financial reports and look at the ratios and look at this and look at that. There's no need to do all that. You don't have to do that. You just don't. There's something called the efficient markets hypothesis, which cleans all that up for you. The stock market is a beautiful thing when you see it in a certain way. It's amazing. It's like, wow, all these laws of financial physics just come together magically and create this space where a monkey can invest and make money. That's what Burton Malkiel did in his experiment in 1971. He had monkeys invest. Let me keep going. What are your thoughts on real estate investing? Roxanne, it depends what kind of real estate investor you want to be. So if you want to be a hands-on investor, let's say you want to own property and have tenants and all that stuff, then that does require a lot of training, a lot of work to learn all the ins and outs of that. And then there's like the administrative side, the bureaucratic stuff, the paperwork, all that. I hate that stuff. I just do. I don't like filling out a million forms, answering a bunch of banker questions, or dealing with tenants and all that. It's not fun. I'm getting out of the landlord game. Um, Another way is you could buy shares in a real estate investment trust. There are plenty of REITs, REIT. Real estate investment trusts give you exposure to real estate directly on your phone, on an app, without you even having to do anything involving tenants and everything. And again, the Prime program is a lot like real estate, except the ROI is much, much higher. than real estate. And also you make your money. There's no work required. There's no expenses. And there's also complete liquidity. Real estate does not have a lot of liquidity. If you want to sell your property, it's a whole process. Believe me, I'm selling a house right now. It takes time, and you got to go to the bank and fill out forms and make sure you have all this paperwork together. If start your business with something similar to what we do in the Prime program, it's like you literally have a business that you can sell in 30 seconds and get full market value for that business. So let me keep going. Let's see here. What was the GameStop phenomenon? Great question, AC. Basically, meme stocks were kind of this new phenomenon that investors didn't understand. Traditionalists and financial experts were very confused because what happened was you have these mobs of people that just push the price of the stock super high to an to a highly irrational level. And so on one hand, it's baffling and you're thinking, wow, people are making money like this because it leans into what they call the bigger fool theory. Basically, you're speculating, you're buying it at $20 because you believe that there's a bigger fool who's going to buy it from you at $22. That's what, and it becomes a game of musical chairs, almost like a Ponzi scheme where eventually at some point the stock's not going to keep going up and the people coming in last are going to get killed. Um, the other side of it, though, is that the smart people tend to always win. The financially conscious people tend to always win. The patient people always win. So, what happens when you see a meme stock phenomenon is there are people that understand things like irrational exuberance. They understand stock market research, and they say, "Oh, look at this! The people in the market are getting all emotional, and they're bidding up the prices of these assets that have no fundamental value." So, what a person like a Carl Icahn might do, Carl Icahn is a famous corporate raider, or Hindenburg Research, is they will literally just do a short and they'll go ahead and they'll say, okay, look at it. It's really high. So the key to making money is to do what? Buy low, sell, type in the chat. Buy low, sell high. Right. So what they do is they sell. They go ahead and they sell your stock and they just wait. And the only thing that they're worried about is they're like, is this thing going to start coming down? And is it going to come down fast enough for me to make money on this short sell? Or if I buy a put option on this asset, is the market going to do what it's going to do in enough time for me to make my money? But really, it's as simple as looking at, you ever have like that cousin that's running the streets and getting into stuff, and you're like, yep, at some point he's gonna get locked up or killed. It's only a matter of time. But you don't know how much time it's going to take. You don't know if it's going to take 6 months or it's going to take 6 years, right? So that's the problem. But short sellers, they make a killing out there. They love it when people start acting crazy and irrational. They're like, oh, this is great. I'm gonna start. Yeah, the price is high. Well, I'm gonna sell. And oh, you want to buy this thing for double what it's really worth? Cool, I'll sell it to you for that price. And then what's gonna happen is eventually when the price goes back to where it should be, I'm gonna buy it back at a lower price and I get to make that profit, and it becomes a zero sum game because the money goes out of one person's pocket and into another person's pocket. So that's kind of how the market works. All right. So is buying treasury bonds a good idea? Asked Jay Kelly. Right now it is. The treasury bonds are paying really good yields. It's worth looking into. Veronica, Dr. Boyce, may I please have contact info? Oh, yes, about the income tax people. Yeah, I don't know who you're referring to, and I'm very sorry. I wish I could tell you. We don't have, I don't think our team has any income tax people available. But you can email support at theblackbusinessschool.com and maybe they have someone on a list, but I'm not aware of anybody. I apologize for that. Mech Nunn. So does that mean I should buy more Apple stock? If you like Apple, then it could mean that. Apple has been a great investment till this point. Is it going to keep going up? Nobody really knows for sure. But I like Apple. I own some shares of Apple. I'm not buying any more right now, but I do like Apple. May I please have a copy of the companies that pay the highest dividend? Okay, that list. I put that list in the chat. Let me see if I still have that. Well, that's not the one, but here's that link again for stormproof investing. By the way, this shows you how to prepare your portfolio in case of a market decline. Now, let me grab the dividend list, and I decided to call it the list of dividend monsters. So here are the dividend monsters, the companies that pay really good dividend yields that you may want to look into if the market dips. There we go. So there's that list. Um, let's see, ticker for Marathon Digital. Is it good? It's good. Marathon Digital's ticker is MARA. MARA. Is it a great company for a long-term investment? I can't say for sure. It's great for selling options on the Abundant Rising. Dr. Boyce, do you think it would be worth enrolling in the Prime program when my capital base is not 10K? If not, what plan should I enroll into? That's a great question, Gina. I would say I would say that it's good in the sense that we talk about ways that you can actually get your capital base up, ways you can work with others and partner with others. And also remember there are students in the class that do have a capital base. So if you came to say the stock options summit and you connected with other people and you work together, maybe there would be some ways to do some trade-offs and connect with people that can help you get the capital that you need. But then also sometimes you may have, sometimes it's okay to pick up the knowledge even if you're not in a position yet where you can really apply it the way you want to. So that way you'll know that once I get the capital, I'll know exactly what to do. I won't have to go and spend 6 months or a year learning how to do it. And also the other thing is about with the Prime program. And again, everybody who's in the Prime program, give your honest assessment, like in the comments in the chat, just say something. And again, like it or not, I just want you to be honest so people will know that this is the real deal. But the other thing too is the Prime program it isn't just it isn't just about sort of the whole selling options and making extra income. That's the highlight. That's the big fun part. But there's also tons of stuff in there about stock options and how to invest in stock options and everything else. So we basically give students everything that they need to understand stocks, stock options, and then that income driven side of investing. Okay, so let's see, Derek Mitchell. So the URL is drboyceprime.com, drboyceprime.com, or you can go to boycewatkins.com. There's a training called How to Make Money Without Working. Or another option is you could text the word money to 87948, and I'll send you some information. You text money to 87948. Okay, a couple more questions, and then we're going to bounce out for today. Derek says, I agree. The support team is awesome. Thank you for saying that. They'll be happy to hear that because I push the team pretty hard. How do you explain to family and friends about stock options if they are interested but not fully understanding how it works? You do know that with the Prime program and in our options programs, you can share it with your family. We not only allow it, we encourage it. We are big believers in family in the Black Business School. Family is really important because family is a cornerstone of wealth. So we want you to bring your wife, bring your kids, bring the dog, bring everybody because it's better when you do this as a group. When you grow as a group, that's easier than just trying to grow by yourself. This is not how economics is supposed to work. I want you involving everybody. Like, with the All Black National Convention, I love it when people bring their whole family, or I meet people and they say, "Oh, these are my three kids, and this is my husband or my wife." And that to me that's the dream. That's the dream. Black families getting together and being creative and making money together and building legacy together. There's nothing better in the world than that. That is the fantasy. That to me should be the big dream, not silly stuff like going off and becoming an artist for Diddy or going to Hollywood so you can get screwed over like Terrence Howard. Those are not dreams to me. The dream is the Black family loving each other and creating a really happy, safe, wonderful, nurturing environment where the children can grow up and be proud of where they come from and what the family has and everything else. That's to me, that there's no better dream than that, in my opinion. No better dream. So and just to give you an honest, reflection, I love my wife and I love my kids and I love my family and it's amazing. But if I could do it over again at the age of 20, I would have changed all my dreams. Like I would have, first of all, maybe I still would have went to school and stuff, but I would have focused on that big thing I've told you guys about building the capital base. I also would have built another part of my capital base which would have been a family. I love kids. I'm like a natural dad and I just scoop kids up and I just love to teach them and everything. If they'll listen, I'll teach them. And I would love to have had like six kids with some lady. Hopefully it would be my wife, but if it wasn't her, then don't tell her I said that. That sounds kind of mean to say it that way. But literally, like six kids and us just raising these kids and school educating them ourselves and building a business together and turn that into a family empire and then teaching them about the world and keeping them safe and then having them all grow up wearing like business professional dresses and nice fancy suits and us going to the office together and saying, oh yeah, this quarter we only made $8 million or whatever. Like that to me is awesome. That's Black power in my opinion. And so I think Black power is linked to Black love, Black health, Black family, all these other things that are tangentially connected to economics, they all fold into each other. And that's really my style of teaching you is I want you to see how all these things are connected. And also I want you to take some time to go beyond just the superficial of making more money means that I'm going to drive a Lamborghini and live in a big house. We can get you the Lamborghini, we can get you the big house, but there's so much more beyond the house and the Lamborghini that I want you to see. And that to me is the essence of economic consciousness. I want you to see how that connects to your freedom, your happiness, and all the things that money cannot buy. Money is a tool to give you access to the back room, to the VIP section, to the penthouse where you get access to all the things that money cannot buy. Okay. So anyway, are there courses on homeschooling for your children? We do have some homeschooling stuff. If you email support at theblackbusinessschool.com, we have plenty of stuff there. Also, in case you don't know, we do have a whole Black Business School for children that's really good. It's called Black Millionaires of Tomorrow, and we give children certifications in stock market investing, entrepreneurship, real estate investing, etc. We also have really great flashcards for children. If you go to drboycebooks.com, at drboycebooks.com, there's a whole bookstore with flashcards and workbooks. And if you just search for flashcards or search for workbooks, you'll see that we put together a lot of tools for families that want to educate their kids on economics. Because you can't tell me that we're not the best on earth when it comes to educating our kids. A white lady from the suburbs cannot educate my child better than I can, period. No, I don't know if that sounds racist or not, but I do not care because it's about time that we stop, we get past the nonsense and start getting to the dollars and cents, like really getting to the point where we're doing stuff that actually makes sense. So that's what I believe. All right, so I'm gonna get out of here, guys. I hope this was beneficial to you, and it's great to see you as always. And again, the Stock Options Summit's April 19th, stockoptionssummit.com. That's going to be in Los Angeles, stockoptionssummit.com. Also, this week on Wednesday, we're going to show the movie B1 the movie. We're going to do that during the book club. You can join for free. Just text the word greatness to 87948. If you text greatness to 87948, I'll send you an invitation. And that's it. So I'm going to go and eat some food.